everybody. Hello, warriors. Good day to you. I also want to welcome our viewers from investing.com. Welcome to ForexAnalytix community of Eagles, where people that come here, their goal is to soar above the crowd. Everyone doing okay? I have a great guest for us today, Barry Mohan at Iceman Trading. You need ice, water running through your veins to do this. He has a great story to share, a journey that many of us have been through, the twists and turns of the broken road of becoming a trader to make a living out of the market. Hello, Kareem, how are you? So yesterday I talked about the euro. Didn't believe that it had peaked. Thought that we would take out 2090, which is a high. I'm having some trouble with my mouse today. Still having trouble with it. It's not switching for me. No, I'll have Steve show it. So anyway, we are challenging yesterday's highs. The highs that were made back here were about 2091. So that's in year. In fact, there was a great pip given yesterday on that pullback. First, I'll cover gold. Here's Grega's count on the gold, this impulsive move that we had from the 1230 level or so, 1236. This little pullback we're getting shallow, should be shallow, and we should get one more high to complete this part of it, even if it's a big ABC, and then get a bigger pullback for the wave. Looks like he's looking for 1350, which were the highs that we had a few weeks ago. Just want to show you the pattern in play that our subscribers got. Just go back to the TL. As you can see, there's a lot of great research on every page, on every pair, in different methodologies, Elliott wave, harmonics, basic technical, and candlesticks. So here's some pattern in play. Grega got long yesterday in the euro, looking for 23.5. So those targets are higher than what I'm looking for, at least initially, to take out that 120.90 level. 121.5 is a fib number that Blake pointed out yesterday. Everyone with me? Stelios had put out a new trade in pound Kiwi. Big stops on this. He's a macro trader, but he's been bullish, constructive on this. So it got to a level to where he was finally pretty constructive of it. We only put our high probability trades with at least a 3-to-1 R to R on our active pattern in plays. And let me get to a few other markets I want to cover today. Traders know here that I've been looking for 62 in the crude oil, and Steve has a fib number of 62.80, something that I showed when I went on TFNN with Larry Pesavento. So we're at the 62 level, but something that I teach, and it's important, not just that it achieves a price, but how it gets there. Happy New Year to you, Sneeps. So it's important how it gets there, and how the crude got there was by confirming this move. So we could do some work here between, say, 61 and 63, and I'm going to start to look for momentum divergences to begin to build. I still think there will be a good short now that we're completing this. See if I could get it to change. Got it. So going all the way back to 2015, this was a falling wedge. So the objective was here, 62. We're right there. So for those of you that want to learn the rule of how much a wedge can retrace, the rule is 100%, not 38, not 50, not 61.8, but actually 100% of wedges can be retraced. That's exactly what happened here. So here's a live example for you. So I'm going to be looking for reasons to short the crude for at least some type of pullback to correct this big wave that we've had all the way down from this 26 level to maybe 63-ish, and maybe we get a pullback back towards the 50 big round number going into the spring. I still think that's a scenario. I think it's pretty late to start chasing the crude market up here now that we're reaching some objectives. And I'm sure if you did a fib retrace of this move to this move, that we're approaching some type of fib here as well. Everyone with me on that? So we want to talk a little bit about the yen crosses. It's something that I talked about early in the week. Blake talked about it too. First of all, let's look at one portion of it, and that's US dollar yen. I'm really not impressed after we got towards this 113 level. Pull it back down into a different time frame here. So it's very possible that this recent high that we had here back at 113.60 holds, and this could just be a failing rally here up towards 115. So Euro yen's extending it. We have some nice research on that as well. 36.50 is some type of fib extension on Euro yen. Getting back to the crosses, I've noticed that Aussie is starting to stall here a little bit. There is some divergence developing. Let me look at the Aussie first. Compared to the European currencies, cable and euro, starting to lag. So this to me is a nice setup up here for at least a correction. This last high, glaring divergence in Aussie. Glaring. Can everyone see that? So here we had a confirmed high right here. And just like I was talking in crude, you have to let things do some work, distribute, have momentum, begin to fade. But this is a pretty glaring divergence. You could probably take a shot at the Aussie up here. Risk, you have to risk the daily ATR for a swing trade. Risk about 80 pips above where we're at now. That would take you over 79, looking for at least some type of fib correction. This was one heck of a move. Actually, the major trend line came in at 75. So just ballpark it and say 360 pip move, 38% correction would be about 140 pips. Could take it down to 720 or so, 740. So scalping opportunities look pretty good there. So if you put the two together, a stalling Aussie that's had a very good run, and what I just covered in the yen, Aussie yen made a marginal new high up here. Again, glaring divergence, just made a new high by a few pips. So I think that we could get the correction here in Aussie yen as well. To me, it looks like it was just a stop hunt. Here's a high here, 88.40. This candle's high was 88.41.70. So everyone who had their stop over exactly over the high, they're gone. Something else I teach: don't put your stop right over a swing high, because the algos are going to pick you off every time. Give it tolerance. Let your trades breathe, and just like you wouldn't have had your stop here if you would have given it some tolerance and you were selling this rally, you're still in the trade. Otherwise, the money has been pulled from your account and some algo has it. And hi, Abdul, how are you? And now the market's lower than where you were taken out on your stop. So that's called being right the market, wrong the trade. The major cause for that is that you're not letting your trades breathe. I think that if you're going to be a swing trader, if you can't be wrong for a day or at least an hour, how can you be right for 3 to 5? Stop hunting. Yes. Okay, so those are my views of the markets. Maybe we're going to have some guest appearances. Sometimes Grega drops by. I'm going to hand it over to Steve Volge. Steve's one of the more disciplined traders. I want to see what he's thinking here. But all of us were in agreement yesterday, after being dollar bears for a while, that yesterday's bounce was no trip to Hollywood, that it was way overdue for some type of bounce. We could even hold here again and do something like an ABC, but definitely, you know, it didn't change anything in the dollar. In fact, I'd welcome an ABC, since I think Aussie, which isn't doing much with the dollar being weaker, would be pressured if the dollar caught a bid here. So dollar index still looking negative, could have rallied back to 92.40. There was even a gap at 50. That's possible, but longer term, we're looking for lower levels, looking for new lows in the move in the dollar. We're really not that far away from that happening. As you can see, all the way back here at the beginning of, right after the election, this was the low in the dollar. So I believe that's going to be attacked at 91.01. We're only a few bad days away. Here's a gap that shows up on the weekly, not on the intraday. So nothing here in the dollar that says King Dollar is about to reassert itself. To me, it looks like the king, that has been a palace coup, and that the King Dollar is no longer on the throne. I'm thinking under 90 towards 88.5, that the king may try and retake his throne. So those levels are a little bit down the road in price and time. And with all that, again, welcome viewers from investing.com. You have to stick around for the interview that I had with Barry today. I think it's going to encourage you on your journey. Here's a guy that made the transition from having a construction company to being a full-time trader, and he had his travails. He's also a teacher now. So although he trades stocks, people go, well, Dale, what's the difference between if you trade FX or you trade stocks or you trade futures? What's the difference? And I say the difference is leverage and beta. But in my view, a chart is a chart is a chart. So no matter the asset class our guests trade, we could all learn about trading, because really it's all the same. People just having an arena that they have become familiar with, that they're comfortable with, that they enjoy trading, and why fix something if it isn't broken? So yes, yeah, the guest on Twitter, Forex Gal. Okay, so stick around. So Steve.
Hey Dale.
Oh, okay.
I
so
like.
They're not.
No. We're not sure. Probably not. But okay, you don't.
Right.
Yeah.
What's the difference?
I like the fact. That you started today's introduction with crude, because we just had a conversation on the chat room about it. Because coincidentally, I don't have, unfortunately, much time. I sporadically check Twitter because meetings, work, and everything don't leave much time.
Right.
But while checking Twitter, I saw a Bloomberg tweet, and I tweeted my comment about it actually, that one of the key gauges of oil market strength hadn't looked this good for bulls since 2014. I have to be absolutely honest here and tell you that I did not even click on the link, because I really don't care. It doesn't matter to me exactly what they were looking at. The point being that
they always look the best at the tops and the worst at the bottom.
Yes, exactly the same kind of people, and I'm talking in general about journalists. I remember with stages we were having a lot of fun and laughs about it when oil was plummeting and it was trading below 30. We started seeing
we were going to see
titles about seeing oil in teens, like 15, 16, 17, etc. Yeah. And some more ridiculous titles. I even remember seeing one if oil could actually trade below double digits, and some BS like that. And it's the same people that after oil runs from 25 to 62, right? Which is like two and a half times the prices,
right?
Are now seeing, the signs that the crude market has not looked as bullish as this, like since 2014, right? Point being, if you remember, since a long time ago, and Stelios, from a macro perspective as well, like since the very lows, he was saying, I think oil is going to bounce back to 50, 60 for sure. And
he said
with
60
Greg,
by year end, 60 by year end. That's a great call.
Yeah, and we were looking at technicals with Greg, him from an Elliott wave perspective, etc. That, and we were saying that 62, 63 is a great target for crude before it actually perhaps corrects lower to 55. And now that we're almost there, they think that crude looks extremely bullish. So usually these kind of titles are also great contrarian indicators, because after seeing such a title, if you ask me, where's the next, let's say, $5+ move going to be, to the upside or to the downside? I'm going to tell you the downside.
Steve,
right?
the interesting thing also, hi everybody. The interesting thing is that 2014 was the start of the big drop from $107 down to 45. So
yeah.
They're talking about something that didn't look this bullish since 2014. Well, in 2014 it collapsed, so I actually don't think it.
Yeah.
Anyway.
Steve, if you go back, guys, if you go back on the weekly, this rally from wherever that big bear began, depending upon the starting point of the bear into the low.
I'm going to take you to the weekly. Here it is.
Yeah, so there's your head and shoulders. So
yeah,
that it does project higher, but so you already have.
No. I agree with you. The point is about timing. I mean, first of all, I have to say to tell you that I remain bullish crude if we're talking about the medium to long term from where we currently stand. But I think that these are the completely wrong levels to be looking to be long. Absolutely bad area to be looking to be long.
Yeah, you'd like 50. You'd like to see maybe a test to that breakout.
55. Yeah.
Yeah. Okay.
Yeah. Exactly. So I think this is the very wrong place to be trying to, to catch, a further upside for crude, right? So just because coincidentally you introduced by using crude, I have to say that I'm looking likely for a little bit higher. You remember we haven't changed anything. We were projecting that this triangle is going to break to the upside. It has already done that. Theoretically speaking, it has already fulfilled from a technical perspective, that last thrust higher, that we were looking for. So obviously the reward to risk rate, for being long up here makes zero sense. Now, a move back towards 57, 55, and the reaction from there, because as you see, 55 is quite important. 55, don't forget, was, and once again, I want to point to that, 55 was a level that we found at the very first or second trading day, the first trading day of the year 2017. And this is an area that held for almost all 2017. So once again, one instrument again that we see a high or low being formed at the very, very first few days. In this case, it was the first day of the year that defined almost the whole year, right? So obviously this is a very important area. We retested it once again there. Then we tested it once again, but that rejection was very temporary. I mean, it lasted one day. We broke above it. Obviously, 55 is a very important level for the market. As I said, buying up here makes no sense, but a move down to 55 would make being long crude appealing once again, in my opinion. Okay. So now, having mentioned that, let's go ahead and see a couple of things. First of all, if you remember, I was very specific yesterday. A lot of people were looking at reversals once again in the euro, etc. I was very adamant about it, that I have absolutely no reason. And you made a very good comment, which Blake mentioned afterwards when he came on. You said that you didn't like the fact that you would believe more in a reversal of the euro if it had first taken out the highs and then reversed, which it didn't do. And I completely agree with that. And I really think that one down day nobody should let one negative day no matter how bad it looks, affect, you know, a quite clear technical view that we have here. So personally, you know,
Greg took advantage of that one day pullback to put out the pattern and play long side.
And he did very right, because honestly, as I said yesterday, until proven otherwise, I see absolutely no reason why somebody should be looking for a reversal in the Euro USD. Honestly, I mean, it's the equivalent of coming every day back home and trying to find out if your wife cheated on you. One day it might happen, but obviously it's not going to happen every day, right?
Hopefully
so
not.
Yeah. So living with that idea makes no sense. We have a very clear structure here, right? It was a very clear bullish move. We found a low at the very beginning of 2017. We then corrected in a very, very clear and well-defined manner. It was a descending channel with very overlapping and slow price action, which is exactly what you want to be seeing in a corrective move. And now we've busted above it and we're resuming higher. So yeah, will we find a top at some point? Sure, we will. But should you be looking for one every single day? Absolutely not, right? So nothing has changed here. As I said, the 127.2 of this move lower, 122.40, the 161.8, 124.26. At the very least, the 50% fib of the big move lower at 121.67, but I really believe that we're going to go higher from there. Even the 61.8 at 126. I mean, all those are targets that might create some reaction, but honestly, just, you know, you either want to ride this or for some reason you don't like it, just stay on the side, because there is a high chance that you're going to get, you know, you're going to lose your money trying to time a reversal. I don't see mature conditions to be looking for a reversal. In fact, we just broke higher after a well-defined consolidation. So why would you immediately be looking for a reversal, right? More or less the same, although I'm more constructive the euro for a basic reason, because with the pound being affected so often by news about Brexit negotiations, you always have an unknown factor. I mean, you can always wake up and find like a negative title about Brexit, and that might affect the way the cable is trading for at least, you know, a few days. So euro, on the other hand, until we get closer to the Italian elections, I wouldn't expect any real negative surprises. So you know, if I had to choose one, I would definitely choose euro. But on the other hand, that doesn't change the fact that cable doesn't look bearish as well. Not on as long as we trade above 133. Okay, so also trying to catch a reversal here probably gives you a bit of more chance than the euro, but you know, fact remains that probably you should be spending your time doing something else in trading. Now, having to do with the Aussie and the Kiwi, you mentioned the Aussie, and I agree with you. I do believe that this move higher is mature. I do believe that somebody definitely should not be looking to be long here. I mean, at the very, very least, let's assume that this is the beginning of a bullish move. Okay, let's assume this is the beginning of a bullish move. At the very least, I would be looking for a retest of the 740 and the reaction from there to be looking higher again. I would definitely not be looking to be long here. Just to begin with, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We have so far had 12 consecutive days higher. Even if you look at it like that, you know, obviously you would want to see some kind of a retracement before being long again. Personally, I'm really not persuaded about this move. So I would still be looking for opportunities to be short, but you know, I want to see more evidence. I want to see some confluence. I want to see some big rejection. I want to see some levels break. So for the time being, you know, I remain sidelined on this, and you know, I'm monitoring. More or less the same applies with Kiwi. Kiwi looks better today, obviously, although it corrected somewhat lower yesterday. And move to the 50% fib, 71.70. also more or less will confluence with this descending trend line, might give you a better opportunity to see what you're going to do with that. Should, in my opinion, create at least a short-term reaction lower, and we take it from there. Now, let me comment a little bit about the stock indices. First of all, I have to say that the DSI on the vast majority of the stock indices has gone to lunatic levels once again. So let me pull it up. So yesterday we had an 88 DSI for the S&P, an 87 for the Nasdaq. Let me see if I can find Nikkei. Anyhow, you get the point. Volatility, it's quite a low reading, etc., etc. So you get the point. I don't even hear people trying to short indices anymore, which makes sense, because if you see, we are breaking one formation after the other. More or less, this is the last part. This is the last stage of a bull market. There's no question about it, but don't get confused. The last part of a bull market might mean months, right? When you usually see bullish formations break to the upside one after the other, and the inclination of the move higher becoming even steeper and steeper, usually you know that you are in the last mania phase of a bull market. I mean, even if we want to take the Nasdaq into account, the Nasdaq has increased by 6.5 times since the lows, right? Obviously, the Nasdaq trading at 1,000, 1,030, 1,040, whatever the low was, somewhere there.
The Russell's dogging it, Steve. The Russell's the only one, I don't think. Maybe today it will, but it hasn't made a new high. And
you're right, Dale.
But
this formation, I have to be honest, doesn't look really bearish to me either.
It's going to make a new high. I'm just saying.
Yeah, that's how it looks like. Yeah.
The weak sister in the U.S. anyway. That's all.
Yes, you're right. And its RSI is diverging since October, by the way, since the beginning of October.
Yeah, I don't think it'll blow out that divergence either with that trend line that you have down there on the RSI, even if we got to like 156 or so.
It's also the 161.8, the current area that we found resistance in the Russell is also the 161.8 of the last corrective move lower. So it's also a FIB extension level of some importance here.
And the European bourses aren't making new highs, are they? The DAX is not making, or is it making?
Yeah, but something, I really, it's very, very, very important being nimble in the markets, because
good out.
The day,
on it.
Yeah, I managed to escape this one by actually booking a little bit of a profit.
Yeah.
Because
why didn't you reverse?
Because I had indications that this thing might be resuming to the upside with this hammer, and the fact that once again we didn't manage to break below it.
Yeah.
But from an indication to having a good, a high conviction that it's actually resuming higher, there's a big distance. You know what I mean?
Yeah, I know what you mean.
So I managed to bail out with a little bit of a
hard time. It's just because you don't want to be short anymore doesn't necessarily mean you want to be long. But
yes,
in many cases it is though. That someone said to me, before you take a position or you get out of a position, if you ask yourself a question, would you reverse here? That's a pretty good reason to get out. At least a very good reason to get out.
That's a good point. This is the same reason I bailed out on gold yesterday. I could have done it at a better price and actually book a profit. I could have booked a decent profit because it ended up moving to 1,306 while I was looking for 1,300, if you remember. But the price action that we had until the point that I actually bailed out on this with a minimum loss of 0.18%. Because it didn't fit my criteria anymore. When I took that, I was looking for a sharp reversal to at least test 1,300. So I wrote yesterday in the chat room as well that, I'm going to bail it out. Even if it moves lower, I don't care, because I entered this position for a short-term trade to 1300, and this has already not manifested, and this starts to look like to me like a short-term consolidation before another move higher. So since it doesn't fit anymore the initial criteria I had in mind, staying on it would be changing the kind of trade I had in mind with the hope and expectation that that something else than what I had initially planned would work, which is the wrong way to approach it, in my opinion. You know what I mean?
Sure, unless you're a masochist.
I'm not anymore in
markets. The markets are a great place if you want to be a masochist. You can find many ways
absolutely.
to create pain in your life.
Absolutely. So I do see the possibility of this ending up being some kind of a consolidation. Of course, you can never know in advance. And then having one more thrust higher to the 161.8, perhaps, before a bigger move lower. Okay. So I guess Blake is with us. Blake, and I'm sure he's going to address any more questions or issues that we have, which I better a lot. Blake, you want to take over, mate, or you want me to resume?
And speaking of Blake, he was the only one on the team that turned bullish gold under the 1250 level. In fact, there was a pattern.
I've told you before about Blake, right? Yeah. I have to tell you that the first period that we became friends, and we were talking about trading, etc. When I didn't know him so well, like years ago.
Yeah,
sometimes
sometimes
he was telling me that, oh, I see this happening, and I was like, I was really trying to see what the hell he's seeing, and I was like, no way. I mean, it isn't there. I mean, that's just shooting in the dark. You know what I mean?
Yeah.
And then I found out that besides some levels, even when something looks bad, he has an internal clock. He has an intuition that works more often than not. If you don't experience it, actually, you don't understand it.
No,
but
I don't know about that. But
I understand it because he's a lot like me.
Hey, can you guys hear me?
Yes, we can, mate.
Sorry,
hey, Dale, if I'm half like you, and thanks for the kind words, Steve. Hey, I noticed you pulled up gold. I can't help but notice gold and silver, how strong they are. I mean, this is
it's amazing.
It's amazing. I wrote in the analysis in silver this morning. I'm like, okay, how many people short silver? Because looking at this chart, I was looking at the exact same chart you are. I mean, we got minus there's a bigger 618 level right up there. Here, actually.
Yeah, from here, I know. Yeah.
I'll take it over here.
Go ahead, mate. Go ahead.
So where am I at? Okay. All right. So you can see the bigger 618 retracement right here, and I was thinking, man, how many people are short? I mean, it makes sense. It made sense the last 24 hours to be short the silver market right here. But how many people are short? Relative strength was way overbought. We've had this massive rally. How many people short right into that resistance? And I mean, what if we spike up here? What if we continue higher? I mean, it's entirely possible. I think that is the risk for the silver market at this point. Hey, really quick, while we're talking, the peso, I have a long U.S. dollar Mexican peso since yesterday, but I picked it up as long as it stayed above 920, it's fine. But look at this daily candle that's developing here. Nice little hammer, and the dollar peso's got a couple of things going for it. A, this is basically the breakout point. B, and I could probably just do this, okay? And let me delete this. Okay, it's around the 38% retracement. B, the markets are, any which way you slice it. We've been up for the last few days. The markets are up, what, 2%, just for the year already, or whatever the number is. And we're only a couple of days into the new year. you know, what if the markets actually pare back some of these gains? Then the emerging market currencies are going to be the ones that probably have a little bit of trouble, I would think. So, you know, the U.S. dollar Mexican peso here, it's actually quite bid. And what I'm going to do is I'm going to get rid of this. I'm going to go over to an intraday chart. I'm going to show you what I was staring at here this morning.
By the way, Blake, sorry to interrupt.
Yeah.
10-year treasuries to new multi-month lows following ADPs. They're just actually testing multi-month lows.
Oh, they are. They are.
Yeah.
They
just
are.
To look at it. Yep.
Yep. And then.
And the yen's not over 113 yet with this happening.
Yeah, yields are pushing higher as well, and that's right. We don't have this. I mean, the dollar yen is pushing higher, granted, and we're yeah, this is a little inverted head and shoulder pattern, I guess, that could take us maybe to, you know, 113, maybe a little higher. It's possible, but at this point, you know, you gotta be careful with this. This
it should
dollar
be
yen is stuck.
Should be a 113.60 with what yields are doing right now.
I would think so. I think it'd be a 113.30, and I think that's, you know, what most people are struggling with. And, you know, and I still have my New Zealand yen short, and I know we're right up here against the highs, and it is because stocks are so strong. You know, they have pushed back up towards this resistance, and same with like the Aussie yen is pushed up here as well. But again, you know, if you look at, and I'm gonna put in the S&P really quick. Let's do the here's the S&P, right? And if you add oh, whoops, hold on, I was trying to add a symbol, sorry. Here's the S&P 500, right? And if you you add US dollar, Japanese yen, Aussie yen, New Zealand yen, CAD yen, now the Euro yen's been playing a lot of catch up today, but you can see, and I'm gonna just make this actually a little bit different here. You can see a lot of these yen pairs are underperforming. I should have those as line charts, but they're really underperforming the S&P. So because of that, the S&P continues to rally, and some of these yen pairs are just, you know, maybe they will play catch up, and maybe we'll see a little bit of catch up now that yields are moving up. But the dollar yen is pretty firm at the moment, and I think that a move to 113 is possible here in the dollar yen. You can see this little. We're at the 50% retracement right now. And, you know, equities continue to be really well bid, and that's keeping the bid going in these yen pairs as yields move up. So, but I think what we really, I'm really watching, and I know Steve was just pointing it out as far as gold goes. I mean, gold and silver, if these hit new highs on the day, okay, if they hit new highs on the day, you've got to be really careful with the yen, because if they hit new highs on the day, then that means the yen pairs are probably going to reverse. That means the yen's probably going to strengthen from here. That would be my initial gut instinct at this point. So, and like I said, I'm surprised that gold and silver are as well bid as they are. I mean, if silver breaks out above 1720, it's going to be extremely bullish. And you know, that can't go unnoticed. So, you know, you got these correlations which are typically really tight, then they're diverging like they are. That is a bit of a risk in the market at this point in time, I would think. Okay, so let's take a look at, one of the other pairs I wanted to talk about, speaking of the yen, look at the euro yen. The euro yen is closing in on the 161% extension that comes in at 136.50. This is going to be a really, I would say probably very key resistance. And the reason why I say that is because not only is it not only is it the 161% extension, it's not too far off of a range high either. You know, if you take the previous range to current range, it's not too far away from there, which means that you know, once we get up there and we're reaching overbought conditions and on the daily chart as far as RSI goes, it may you know, be at a point where you might start to see some profit taking, but regardless, the euro yen continues to move higher. And matter of fact, the euro yen of all the yen pairs is extremely strong. I think it's probably pretty surprising to a lot of people that the Aussie yen isn't moving higher. Even though I'm short the Aussie yen, it's really underperforming as far as a commodity currency and everything else that's moving up regarding yields. So now, Steve, I don't know if you're still there. You talked about the S&P. You know,
I'm here, mate.
Okay, so we talked a little, or you talked a little bit about being in like the mania phase with the S&P, and you're right. This could continue to last a long time. It seems like, and one of the guys in the chat room was saying it's like Groundhog Day. It's like the year never ended. We continuously just see this you know, rally in global equities, and it's non-stop. It's non-stop. And at some point, you know, the party's going to come to an end, and I don't know where that's at, obviously. But one of the things that that you had pointed out is that that we're getting into the unsustainable. So, you know, we're having difficult times. Steve and I were talking separately. Steve, how do you find resistance when the S&P is in breakout territory like this?
The problem is that we are always defining resistance when you are in all-time highs by projecting fib extensions. That's the only thing you can do unless you have like some ascending wedge formation or whatever, which we have broken above all that by doing fib extension. But the point is that fib extensions are getting completely exhausted. Just we're not getting corrections anymore. That's the fun part. I mean, you're getting micro corrections, which, let's be honest, making like fib extensions of like minimum corrections is like, you know, shooting in the dark, right?
Right, it is. It is, and so, you know, one of the other things, and I know you didn't point it out while you're on the webinar, but you talked about it in the chat room, is the DSI, which is the daily sentiment index.
No, I said that actually.
Oh, you did?
Yeah,
okay.
I did.
Yeah, so it registered at what, 88?
Yeah, 89, something like that. Yeah, 88.
Yeah, it is near, you know, sentiment levels that are indicative of turning the market when sentiment is extremely bullish like it is right now. So that's another risk. And does that mean that it's going to stop the stock market, like, you know, for good? No, but last time that, if I remember correctly, last time we had an 88 or 89 DSI in the stock market, we did take a breather. And the breather might have been, whether it's this one right here or this one right here, it was a near-term top for a couple of weeks, and we might be faced with that here in the coming days as well, with the DSI at such very, very overbought or oversubscribed levels. Matter of fact, and the Nasdaq, I'm just looking at it right now. The S&P is at 88, and the Nasdaq was at 87. So both extremely frothy readings as far as sentiment goes, and those should be noted. And you know what I'm going to do really quick, and by the way, if there's anything that you guys want to see, make sure you bring it to my attention. Those are just some things that I wanted to discuss. Volatility right now is near record level lows. This trading view has it at 9.1. On Bloomberg is quoting at 8.95. So those are, you know, very low, record low levels in volatility. So just also, I think you should keep that in mind as well. Let me see here. Abdul asked for the pound Aussie and pound New Zealand. I don't think anything's really changed in those. They're actually quite choppy. the pound Aussie and the pound New Zealand. I've been looking for areas to buy these, and the pound Aussie, actually, this is probably the one that I have played to the long side, and I played it, I think it was on Monday. No. I played the pound New Zealand, I'm sorry. I played the pound New Zealand, but the pound Aussie, we have same, you can see this 618 of this move, 127% extension, big confluence down here. It's acting as support. If I was to buy the Aussie or the pound Aussie, it'd be pretty simple. Buy it here and don't let it drop below 172. But a drop below 172 would be, bearish for the pair. Pound New Zealand, probably very similar situation. You want to buy the pound New Zealand, fine. Don't let it break below whatever this low is, 189, and we're at 190 and a quarter. So as long as you have your prices that is your risk, that's the most important thing. And I think that's how you have to play these particular pairs. And I think that those are very well defined risks in the market. Forex Gal says VIX is low, time to go. Yes, that is an old saying, and VIX is low, but also keep in mind the volatility has been low. VIX is low, time to go, or there's a couple other sayings that go along with VIX. VIX is low, it's basically a time to sell the stock market. But as you know, as you can see here, we've been at these levels through the last 6 months, and so that hasn't translated in the stock market, because the last 6 months, if you had sold, you sold here at 2,400 in the S&P, and we're at 2,700. Over 15% higher, or whatever that number is. Let's just say it's 13% higher. So that hasn't really translated, but yes, it's one of those situations when the VIX is this low, you got to be obviously very careful with your equity market exposure. Let's really, speaking of micro analysis on the S&P, I think what we can do really quick, and I haven't done it, so it's nice to do it with you guys, is let's take a look just at, the sell-off just from the last few days. See, we're above the 161% extension here. If you go the month of December, which basically we can say take this high here. All right, we're past the 161% extension there. Past the 160. I mean, we're beyond so many extensions. It's just it doesn't really even make sense. But you can see the market is just continuing to. It hasn't stopped. Any of these fib extensions hasn't stopped the market. But like I said, I think one of the bigger risks actually near term is that sentiment is so strong at this point, and I think sentiment is the extremely strong sentiment in the market is a little bit of a risk near term. Let's take a look at some of the other dollar pairs, just because the euro dollar. Okay, this euro dollar, I would not be surprised if we pop these stops ahead of ADP, or NFP tomorrow. So the euro dollar had a nice little pullback. Grega really identified that yesterday as in his pattern in play, and I still think that the euro dollar could take the stops above 121 and possibly to 121.60. I don't know if we're going to get all the way up there today. Okay, I'm not sure if we're going to get all the way up there today, but I think that in the event that we get up to 121.60, which is a 50% retracement, that's been the level that I've been thinking, and I know I mentioned it in the week ahead video. That's the area that I would be interested in selling the euro on a brief new high, taking out stops above those highs and then reversing. I'm not a dollar bull by any stretch of the means, but one thing that I have talked about the last few days is that even though I think the dollar is going to continue to weaken longer term, I don't think it's going to be a pretty move. I think it's going to be very choppy on the way up and on the way down. So, you know, or excuse me, as the dollar continues lower, it's going to be a very ugly move. It's not going to be pretty like it was last year, where we had this great move higher. You know, as granted, minus any like tape bombs, you know, if in a normal operating market with limited news events that are driving the markets. If it's just, you know, central bank activity, I don't think it's going to be, you know, I don't think it's going to be very clean. So if the euro hits new highs and we hit 121.60 and then we pull back, that wouldn't be surprising to me in the least bit. And that's why I'd be very interested in selling the euro dollar at a new high today if we can get above, you know, the 121 level, where stops gotta be, I've got to imagine there's a lot of stops up there at this point. I think the market knows that. The cable continues to hold up really well as well. I thought that the cable was going to really underperform, but the services PMI came in better than expected overnight. The Aussie, this is its 13th day. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is its 13th day, and it's the Aussie's up for the day. Now, will it close higher? I'm sorry?
Barely. I think compared to what's happening in the euro and the pound, it's the first day in a while, Blake, that I've noticed it doesn't have the same momentum as the European, the euro and the cable.
Yes, and with that being said, I think, if I'm not mistaken, the euro, or excuse me, the Aussie, this is a record as far as the amount of time that it's rallied, the number of days that it's rallied. I read that somewhere yesterday, I believe on Twitter, that it was a record number of days that we've rallied consecutively, which, you know, you got to be a little nervous about when we're up at these levels. Yeah, you can see it's flirting with you know, its break even point. The Kiwi, I've been looking for a move up to this 50% retracing. You can see I set an alarm up here because I wanted to be notified in the event that the Kiwi gets to 71.65, and because I'd frankly like to be a seller up there. I just don't know if we're gonna. If the euro pushes, then if the euro pushes, then I think that the Kiwi could make that push as well. The Swissy's been relatively heavy the last, you know, week, but one of the reasons why it's holding up right now is because of yields. It's like the dollar yen. As yields continue to go higher and bonds get weaker, the dollar Swiss tends to be a little bit more responsive, like the dollar yen, to the market. So we're actually holding up quite well as far as the dollar Swiss goes, in relation to the euro dollar moving lower, or moving higher, excuse me. The dollar Canadian has been trading pretty heavy, but, you know, frankly, it's holding its own right now. And I didn't even catch the Canadian data. I mean, I was too busy watching the US data, but raw materials price index came in stronger. The IPPI, which is the industrial prices number, came in a little bit stronger than expected as well. So it's telling you that Canadian inflation is fairly strong. And again, I'm surprised that the dollar Canadian has not been weaker as a result. The US dollar Norwegian krona, this thing's trading extremely heavy. By the way, if the US dollar continues to weaken, this US dollar Norwegian krona looks like it's going quite a bit lower. The Norwegian krona is very strong at this point. US dollar Swedish krona, and that had a lot to do with employment numbers out of Norway 2 days ago. US dollar Swedish krona is pretty weak. US dollar Mexican peso, like I said, I've got a small long in this one, and you know, it looks like it looks fairly promising here. It looks like we can move back into the 40s, especially if we get a little bit of selling in equities. It seems like that's asking way too much for the market, but That's the way it is. The dollar yen just hit the 50% retracement at 112.85. It's backed off a little bit. Let me see what yields are doing. Yield still looks strong. What are bonds doing? Bonds are touching lows, but trying to hold. Euro yen's holding above 136. Anyway, yeah.
Taking the advantage, Dale has an interview in 5 minutes, but taking the advantage, I think it's a good opportunity to tell everybody extremely briefly what are our plans for the following months, because we're beginning very strongly with having to do with what we want to deliver to ForexAnalytix. And it's a good idea to tell them, we haven't announced it yet, that starting tomorrow, we will have a very brief period of time that we will make a new year offer with a very decent discount on our semi-annual and then our annual plans. That's going to be up for only 10 days. And we'll also give the ability to people that haven't been registered in the past to get 2 months, and they want to go on a monthly plan to get 2 months in the price of one, so they can actually test extensively ForexAnalytix. We also have the video store coming in within the first quarter of the year, as well as an iPad application, as well as a revamp of our design to one page. So I think a lot of things are coming in the pipeline, and I think it's a good opportunity for them to take advantage of this offer.
Yeah, yes, and thanks for bringing that up. We do have a New Year's offer, and this is only going to be valid for 10 days. Is it 10 days?
Exactly. Yes,
okay,
exactly.
It's only going to be valid for 10 days. And so be ready to take advantage of that as of tomorrow. We offer very steep discounts when we do these. I doubt the next offer is going to be for months. So you guys,
less days than the Aussie was up.
Yeah, it's going to be less days than the Aussie was higher. That's correct. Yeah, speaking of the Aussie, but thank you, Steve, for mentioning that. And we are continuing to add features and build our technology. It's not, it's interesting. I look at all these technology companies, and being with WiseTrade was a very good example of this, but there's so many out there that the companies, they get complacent in their offering. So they offer the same thing, they don't change it up, they don't improve, they don't do things to make it better for the user experience. And one of the things that we continue to do is we continue to build our product of ForexAnalytix and make it better, more usable, more friendly, add features for the end user. And speaking of which, in the next few months, there's going to be a change to the application, but it's not changing any of the data or the information that you have. It's just making it more accessible and easier for you guys to use all in one page. And those are very big improvements without changing the functionality of a program. But a lot of companies, you look at what their offerings are, they have the same offerings from the mid-90s. And here we are 20 years later, still looking the same. And we strive very hard not to do that, and continue to bring you the best products and most technology current products. So hopefully you guys take advantage of that. And with that being said, Dale, I'm going to pass it over to you. Guys and gals, have a great trading day. Good luck.
Thank you, Blake. Thank you, Steve. Thank you, Sal. Barry, Iceman, I'm making you the presenter now. So looking forward to hearing your voice, and you can share your screen if there's anything you want to demonstrate for us or talk about. If you want the visuals, it's there for you. So just waiting for you to activate your mic, Iceman.
Hold on. Let me see where this.
Got you.
I'm on, right? Okay.
Yeah, you're on.
Alrighty. Let me see.
There's an old rock song. Your handle reminds me of ice cold water running. My baby veins. So, Iceman, very nice to meet you.
Very nice to meet you.
Thank you, Barry.
Okay, let me see what which.
So you have a screen share option. If you're showing charts, that's fine. You could also show your website later. And
Okay.
I did have some time to go to your website early this morning, Barry, and what a great story you have. I read your bio, and amazing story. In fact, a story that many people go through when they're making the transition of being a part-time trader, trying to learn the business, to eventually becoming a full-time trader. So if you don't mind, Barry, I know the story, but our viewers and listeners don't. Maybe you could give us a brief synopsis of how you got from point A to point B to now becoming a mentor, teacher, educator, trader, to owning a construction company and trading part-time, starting with penny stocks and eventually moving to big board.
Definitely. Okay, so I need to see. Gosh, I'm trying to figure out which.
It looks like it's the natural or UGAZ 5-minute chart one day.
Okay,
So
I'm trying to figure out which, like, gosh, I know I have the little thing on the side, the little tab on the side. I'm trying to. Is there somewhere else that I need to look at? For me to see which chart I'm showing, or get a screenshot of the chart itself that I'm showing, so that I'm not.
You should be able to just look at what's happening in the webinar right now. But whatever whatever screen you selected, and I'm telling you what you're showing.
Right, the you guys 5-minute chart.
Right.
Okay.
But you can't see it.
Right, at least I know what I'm seeing there. I just want to make sure that.
I just saw your cursor move around a little bit.
Right. Okay.
All right. So why don't you tell us about how you got started and the broken road? God bless the broken road that led you to Iceman Academy. So
definitely.
Why don't you tell us the story?
So I started off. Well, first of all, I came from a construction background. So I had my first construction company when I was about 17. I wasn't old enough to open my own corporation at that time, so my dad opened it for me. And so I've been pretty much in self-employed for my entire life. I've never actually worked for anybody. And when I got married and had kids, scheduling just started to really mess with my jobs and my sites. And once my daughter was born, I figured I needed to transition into something else. I was already kind of looking into stocks, and it was a funny story how I got into it. Honestly, we were on vacation, and one of my friends was looking at his mobile app on Scottrade and showing me some of the stuff that he owns, and I'm thinking, well, how come I never knew about this? And so I started to look into it a little bit, and this was about 6 years ago, and I got into it, and I liked it, and I felt like this was something I can do. Once I sink my teeth into something, there's really no stopping me as far as being dedicated to it, and as far as trying to make it work. And so I started to trade penny stocks, and the penny stock life, got into it, made a ton of money at the beginning. Thought this was the holy grail, obviously, the big life. And then I dumped a ton of money into it and lost all of it, all of the gains, plus all of the money that I had. Pretty much went back broke, And so then I realized, well, this can work. I can do this. I just got to figure out how to do it the proper way. And so stuck my head in.
Why don't you just maybe, I know it's not a pleasant memory, but how were you able to get through that period? I read how it did affect, when you go through a period like that, it's hard not to bring it home. It's hard for it not to affect other things you're doing. How did you get through that period? What were you leaning on to give you strength besides your wife?
You know what? My wife was my only support. You can't go around telling friends that you just lost all your money. you really have nobody to talk to as far as, well, how do you end up getting to a point where you're almost broke in life, right? And so this isn't something that you can relate to anybody. And so my wife was my main encouragement. She said, you know what, you can do this. She said, hey, we're gonna get through this, and you're good at it. You just got to figure out what you're doing that's wrong. And so, you know, there was a point where I didn't have any money to fund my account, but I did have a nice truck. And I ended up selling my truck and taking my money, putting it into an account. And I started off with a simple strategy, which was basically the 813 strategy. It's in one of my webinars. But my main focus was for consistency, to figure out how can I do this consistently. So my goal was set up pretty simple, to make $50 a day for 30 days straight. And so after that 30 days, I did it for 60 days. I didn't get quite to the 90 days, but my goal was pretty simple. Let's just try to figure out how we can make money doing this. And so that's how it pretty much started off.
You know, what a great example of the saying that behind every successful man is a good woman.
Oh, for sure.
You know, you don't know how many stories that I've heard marriages go south after an experience like that. So your best trade was marrying her, Barry. In my
for sure.
Extremely accurate and humble opinion. It's pretty unusual for someone's wife to support them to continue trading after going through what you went through. So count your blessings.
Thank you. Yes, definitely.
Okay. So you went back to small ball. My guess is that period that when you took those devastating hits, that you were increasing leverage and size and were trying to get your money back, and you were involved in some type or form of revenge trading, thinking that maybe one or two big trades would get you back. And then you have the epiphany that you have to, you know, crawl again before you run. Crawl, then walk, then jog, then sprint. So you got back to what worked for you originally.
Right. I mean,
go ahead.
When I you know, it's all mental, right? Now that I know what I'm doing, and I feel like I have a really good grasp on the reality of trading. I quickly realized that that revenge trading, that using too much leverage, all of that stuff is kind of put there. I think it's sometimes it's a downfall, having leverage. I feel like people tend to want to use all of that leverage, and I ended up doing that myself. Obviously, at the beginning, I was taking trades that were 10 times the size of my starting trades, just because I needed to make that money back. I realized that it was not. It's not meant to be an overnight success type of story. And if you do get to that point, you know, where you start off trading and then suddenly you're just fantastic at it, there's that point where you're gonna hit a top and fall really hard. And I think the best lessons in trading comes from losing money. I know it's a sad thing to say, but the best lessons come from going through the experiences of actually losing money and actually trying to find a strategy or system that works for you to try to recover that. It's all mental, though, you know. I mean,
yeah, a lot of psychology. So I also read that you're self-taught. You know, you did not have a mentor yourself, and you didn't try and learn from quote-unquote gurus online, but that you basically everything that you do probably currently is something that you came up with that worked for you and your personality. So I see your setup on the UGAZ chart, and it looks to me like you have a lot of different moving averages. Is that what they are? The blue, the yellow, the red, the white?
Yes.
Moving averages? Okay.
Right. So my strategy is basically an 8-13 strategy, which is the 8 EMA and the 13 EMA. on that chart. That's the same chart that I shared to my chat room. I usually use the 813 as an entry signal for my trades, and it's across the time frame. So if it's a 813 crossover on the daily chart, I can take a swing position, like on you guys, for example. We're long on you guys. We're long on natural gas, basically. So it's a simple strategy, but it depends on your time frame, right? Because I'm a day trader mostly. I've been doing a lot more swing trading, but I'm a day trader, so I'll take something like Roku here into the open, and if I get a point out of it, I'll be happy with that. So it's more so of a quicker gain type of a strategy. I'm not a scalp trader.
Okay, so on your day trading, is this the time frame that you focus on during the day?
5 minutes. Yeah. And I'll start off on the 5 minutes. If my trends are continuing, I'll switch it to a bigger time frame, like a 15 or 30 minutes, because that allows me to decide if I want to keep a chart overnight, if I feel like it still has continuation to it. And so I'll switch up to bigger time frames as the charts are progressing or trends are progressing.
Okay. Well, it's a good thing you're self-taught, because most people teach the opposite. So you knew your personality and what you wanted to do, and you developed this for your personality. Because if you're a day trader, you want to be right away, or very close to where you're entering the trade. And if you're looking at a 4-hour chart, that may not be the case, but shorter time frames do that for you. And then you go to a longer time frame to manage it, to see if you want to turn it into a day trade or a swing trade. Do you believe in taking partial profits when you're day trading?
Oh, definitely. I take what is called a paycheck. That's kind of the word that I use. My paycheck is the only way to pay my bills, to make my account grow, to keep it steady. So even if I take a trade and my paycheck's $150 on that trade, that's my paycheck. That's my money that I'm going to secure. They can't take it back from me. I can't give it back on the trade. And anything else I count as a bonus. So if I add into the trade, if the chart continues to go, all of that is my bonus on top of my paycheck. So I do take that first paycheck in increments. Sometimes, if it depends on if it's whatever X amount of dollars, I usually take that paycheck kind of quickly, bank that money, and then everything else that comes after that is a bonus. So sometimes I'll have a trade that has a $100 paycheck and then a $500 bonus check. So, and
you have to work overtime for that bonus, meaning you have to hold it longer. So, it's interesting, the terminology you use. You're a speculator with a working man's attitude. And, I think it's refreshing, because most people have it, but then when they get to trading, all of a sudden they become something else. And, I'm a big believer that you have to get paid every day by taking partial profits to be there, and then let them run. But I like that paycheck and then a bonus check. So very cool, Barry.
Yeah, thank you. I mean, it has to work out like that. Other than that, what sets in, it sets in with all of the emotions, and it comes into that greed thing. And I see so many traders that would, say you take a trade at $10 and it goes to $11 or $12, and then nobody's taking money off the trade. But why not, right? And then they can watch it go back to $10, and they'll end up going flat on the trade, but they won't take money on the way up. And if you can't grow your account, then what's the point of doing this, right? Because at the end of the day, it's a job.
Till you take it, right, buddy? It's never a profit till you take it.
Yeah, so, it's a job.
Yeah, it is a job, and not an easy one. So how many years would you say, I've asked this question to many of my guests, you had early success, and then you had your speed bump. How much time did it take you to become consistent again and become a trader that consistently had paid checks or bonus checks, and perhaps you keep track of what your hit rate is? What would you say your hit rate is on a trade?
I mean, my average win rate right now is about 62%, which is fantastic. You know, it's a great win rate, especially when the ones that do win, they get added into, right? They get pushed forward. So a loss on a trade can be $100, and a gain on a trade, a good one, can be $500. So
So do you take into consideration before you go into a trade, or you have no idea what the risk to reward ratio is when you go into a trade? You just let the market tell you?
Well, I take a setup based on a flag breakout or an opening range breakout, new high of day breakout, stuff like that, and then my risk are always at that next breakdown. So if I'm long on a position, it's the risk is always to the last pivot point, because obviously if that last pivot point breaks, the chart's invalidated, right? So
okay, so this might be a great live example. So we're looking at this 5-minute one day, and your moving averages have not crossed yet, but the price action is back underneath those two moving averages. What do you do in a situation like this?
Well, in a situation like this, we already went long pre-market into this crossover here, and so we already went long there, and that price was about 76.50, and the chart went up to 79.50. Members already banked on that chart already, and so we're kind of done with that already, right? So basically, if I was to get in somewhere about here, and then the chart goes up, you know, you take paycheck and you end up selling, you know, wherever that price crosses back where your last sell was, it's enough to get out of the trade. There's no reason to stay into it after that, because then you're dipping back into your paycheck. You can't pay your employer, right? So once you take that paycheck, you can't give back money on the trade.
Okay, so what kind of screening do you do? You cover a lot of things, and there's so many different options and instruments and issues and ETFs and everything to trade. What's your screening process like to decide what looks like a good trade? How many things do you look at in your trading universe?
Well, my trading universe is pretty extensive. I have about 15 different scanners that I run during the day based on volumes or crossovers or block trade, stuff like that. I look at a lot of ETFs. I do trade a lot of ETFs. And so they give me kind of a basket idea. Say I'm looking at SOXL, which is a semi ETF, and if that's pushing to the upside, then I know I can jump into an NVDA trade, an AMD type trade, an MU type trade. So I kind of look at my ETFs as a basket directional setup, and then I go to an individual chart and pick a flag setup or a breakout setup or something and associate it with that. So say, for example, you know, natural gas, I'm looking at the futures charts pulling back a little bit. I wouldn't jump into you guys again until I figure out where this is going to settle out, you know. And you know, if we do some simple lines on this, you'll be able to see where this chart gets completely invalidated, and that's right there. So expecting that chart to bounce right at that trend line would be reasonable. But being that the volume's coming down kind of heavy on it, I wouldn't put money into that because I don't think it's worth the risk at that point.
Okay, I'm glad you brought up volume. That's something else I read, that you place a lot of emphasis on the volume. So what are the parameters for volume that you know, light up the light bulb to tell you there's something there? What high volume block trades, or what is it in volume that you look for?
I look for honestly, I'm very visual, so I'll look at relative candle size for that trade. So say, for example, you're looking at you guys down at the bottom here, you'll see that there were a lot of sellers on this chart into this pullback. So, and then the buyers came back in kind of slight. They didn't come back in really heavy with the buying. And so for me, outward wise, looking at this chart on a 5-minute, I'd say, well, maybe we sell into the pops into a chart like this at this point on the 5 minutes. You know, it's obviously comparatively different from the daily chart, but on the 5-minute chart, I'd say, well, hey, we have a lot more sellers than we have buyers. So maybe instead of taking this chart on the long side, for the intraday move, maybe we look at it on the short side, because I can see that even into this pull, you can see that that candle is extending to the upside on the volume sell. For me, I think always there's volume precedes price action, you know, and so you have to have a buyer.
Volume
Right.
precedes price. So if you'd like, Barry, you could show us your website and talk a little bit about your business model if you'd like to do that now.
Okay, so let me grab this.
That looked like a stop hunt on the 5-minute chart. Took out the lows and now everyone,
you know,
got out.
and that trend line can come right back into play there at this point, you know. And even if I was on this trade, say for example, I did take that trade at the trend line, my stop would have been under here. I would have gotten clipped somewhere about there, so I would have been done. You know, it's not worth the risk. Let me see if I can bring my website up on here. Let me know if you see the entire thing or just partial. Because I'm
Still
not
looking at UGAZ.
Oh, you are? Okay. Now I need to see how to get that screen on there. Anyways, the website is IcemanTradingAcademy.com. I would love to be able to change this now.
Maybe I could show it for you here. Hold on a second.
Interesting.
Okay, I'm going to show it for you. So I'm going to make myself the presenter here.
I don't think I have as much.
Here we go. I'm going to do it. Show my screen. Okay, so I'm showing it right now. Iceman Trading Academy, home, about, charts, education. You have a chat room. You have a pretty big crew. Are these other people? They work in the chat room with you and they trade your methods, or they have different methodologies?
We were a group of small group of friends first that kind of started this off. We have similar ideas, but I do like to bring in people with different views on things, right? And so they all have their different fields and sectors that they're really good at. Fibonacci's, you know, crude sector, low float charts, stuff like that.
Okay. All right. Well, Barry, I want to thank you for taking the time to address our community. What a great story, and really the journey. I'm so glad you made it back to the other side, and it says that you love to teach, and I can relate to you in that way, my trading warrior brother. What good is anything until it is shared with another?
That's right. That's right. It's been a pleasure, Dale. Thank you for doing this, and maybe we can do another one some other time.
Okay.
Have a great day, Dale.
Much. And you could, everyone, you could follow Barry at Iceman Trading on Twitter, and there's his website, www.icemantrading.com.
Thank you very much.
All right, Barry. Good
Take
hunting.
care.
Have a great 2018. Keep in touch. You're
You
now
too.
my trading warrior brother, like it or not.
I got that. That's good enough for me.
All right, bro.
All right.
All right, Pace. Have a great day the rest of the day. Remember, don't just count your pips, count your blessings, and we'll wrap up the week tomorrow. Hope everyone's having a nice week, and thanks for your attention. You're very welcome, Kareem. You're welcome, Tom. You're welcome, Joel, Abdul. See everyone tomorrow. Good hunting.